All right, all right. Happy Monday.
Happy
We're live?
Monday.
We're
I
live.
didn't hear a countdown. That's why I wasn't sure.
If you don't give Tom the countdown,
Welcome to December.
If you don't give me a countdown, I'm not.
You're not there.
I'm dead.
I hope everybody had a nice Thanksgiving
Yeah,
holiday. Yeah.
it was lovely.
I just have one thing to say. Go,
Go
Bears.
Go Bears.
Go
For
Bears.
Sure. Go Bears.
This was a very
That's
important. This was probably in the last since 2018 the most important weekend for Bears fans in the city
What
of
happened
Chicago.
in 18?
Well, we went to
Was 18 the double doink?
no.
I think 18 was the double doink.
It could have been. Now you mention it, could have been. But we had a good season.
Yeah, I think
Yeah,
it
we
was
lost to Philly with the double doink.
with the double doink.
Yeah, yeah.
I was on a plane. It was not good.
That was brutal.
Yeah, brutal. I leaned. I'm like, what happened?
Yeah.
But anyway, 9-3 Bears. Go Bears.
Go Bears.
But it was more like we made the national scene. Like we created a stir.
The taking Ben Johnson, removing his shirt, and if you don't know the Wiener Circle, it's just iconic. It's a hot dog stand in Chicago, and
Yeah,
known
when was the last time you went to the Winter Circle?
for a long time.
When was the last time you went to Winter Circle?
But I mean,
I'm a
been
seller of soul ever going to Winter Circle.
Yeah, I've never been.
Oh, that.
I was going to say, there's no chance you've ever been.
If you need to be in the mood for a little abuse, if you're going to go there,
Right. And also, there's
They like the
seems
dish.
to be a line.
always seems fun. But that usually
Not during the day.
but that usually tells you something if there's a
Well, I
line.
don't eat a hot dog during the day. I eat at lunch or dinner.
I'm just saying,
And
there's
there's
no
a line at
line.
those times.
You can go drive by it. The best wiener dog bit, though, is Triumph the Insult Dog at the Wiener Circle.
Yes.
It's the greatest. It's been watched on YouTube like 10 million times. But have you seen it? You've never seen it.
No.
Triumph the Insult Dog went to the Wiener Circle, and it is the greatest. I think he did it for Conan. And
I think it was.
I think it was for Conan, and it's worth watching because you'll watch it 10 different times. It's so good. It's so.
And there's a woman, she's Poochie and Fat Pan, who they now do a food. They're critics, but she works there. She's mean. Actually,
Quite
she's right.
mean
Yeah.
I've seen
To me,
videos.
the woman that I would say the theater room, hands down the meanest, Annalise.
Yeah.
Hands down the meanest person in any restaurant in the city. This woman's probably close. But anyway, Ben Johnson, they challenged him. First of all, they gave away free hot dogs. They said if Caleb Williams threw 4 touchdowns, which he did against Dallas, and then they changed it and they said if Ben Johnson takes his shirt off after a victory, free hot dogs. He did it in the locker room. If you haven't seen the
Yeah,
video,
but they said that like a month ago.
yeah, they said a few weeks ago, and then he did it,
He did it last
and it's
night.
great because as you watch it, the chant that he's going through is his high school football chant.
Oh, we just watched
Everybody's watched
Saturday
it
night.
probably, I think I've watched it on TikTok
Great.
50 times, at least. Maybe 100.
So what kills me about you, besides a lot of things,
Yeah.
is you will watch that video 50 times. So it's probably, let's just call it 30 seconds to be simple. So it's 25 minutes, 25 minutes of your life. But when I say to you, why don't you watch this show? You're like, complete waste of time to watch.
Complete
20,
waste.
I don't want to watch TV.
Right?
Complete.
But you
Anyway,
watch the scene.
there's two things in football this weekend that I did watch multiple times. First is the Ben Johnson, after the game. First, the game was great, but after the game,
Well, as if you're a Bears fan, if you're a
And
Phillies
then-
fan. And I will say, horrible fans in Philadelphia.
they're the worst.
Horrible.
They're the worst.
They were booing to cheering, back to
They're
booing.
actually worse than Buffalo fans. I didn't think that's possible, but they're worse.
What was the other one that was exciting?
The halftime show at the Detroit game, Jack White and
Jack
Eminem.
White.
Oh, that's right.
They
I
was
missed
great.
it.
Was it good? I had
was great.
I
Oh,
had
I
it on mute. I
missed
don't
it.
remember what I was doing.
I love
I
Jack.
couldn't listen to it. I like them.
It was great,
Missed it.
and they play. I watched that on. You should watch
here
it on TikTok.
Watch on TikTok.
Like 25 times.
Okay, but that's like, okay, now we're talking hours of your life. But it was worth it. Here it comes. I know with you. Here, but it's totally worth spending this much time watching it because it's such.
That
a good
was probably the best halftime show ever, and I'm not a fan of halftime shows.
Wait till
Ever?
wait till Bad Bunny for the
Yeah.
Super Bowl. I mean, only half the country will be
Wait,
watching, but
how long? Was it a half hour?
No,
20 minutes?
no,
15
it's
minutes?
probably
no, it's
well,
10 minutes.
no, probably 14 minutes.
Couple
It's
songs?
amazing how they get the
3
stuff-
songs.
How they can get the stage on and off.
He sang 2 songs, and Eminem came out and did one.
Oh, cool.
Yeah, it was great. Both Detroit boys.
missed
Detroit has a lot of music history.
Yeah, those guys are both local.
A lot. I mean,
Yeah.
Detroit has a lot of music history.
So I think everybody wants to know how the turkey was, the
Oh.
Peking turkey. So
Oh, the Peking turkey
you
was
please tell us
freaking
about
solid.
Yeah, it was very solid. Completely worth the experience. It didn't taste like Peking duck,
No,
but arguably one of the best turkeys ever.
it was the.
It was moist, delicious,
It was
flavorful.
moist 3 days later.
Yeah. You didn't. First of all, you would only know that from the goy because
No. I still have it. I still have some.
in the refrigerator. You leave it on your counter.
Well, it's done now. it's over. It's all over.
That's
but the
pretty
crime.
good. I have to say, because normally the Six so over orders, and she's like, "We don't have enough food. We don't have enough food." And we have enough food for like a small bar mitzvah wedding,
Right.
and she actually nailed it this time. Not. I was actually disappointed because on top of the
Because
turkey,
you wanted leftovers.
I
You
wanted
got a monster turkey. That was a huge turkey.
gone,
That whole turkey was gone.
Wow.
gone.
But it was a huge turkey.
It's huge.
Yeah.
It's great. And then so
But you had
we had the
too many
turkey, we had a
people.
turkey breast, and then we had
When I got in, this woman said,
Brisket,
"I got
sorry.
one 23-pound turkey." I go, "Scott can have it."
brisket and pastrami from Green Street. I was so excited for lunch the next day, and then I found out I was all consumed.
Wow.
So I have finally, after 50 years or so, maybe longer,
Perfected.
perfected carving a turkey.
Because we
Okay,
were
tell me
watching
what's
the
your.
Martha
Because
show.
I'm just curious. What's
What?
What's your tip?
The Martha show. You
Not
got
from
it
watching
later?
her, but from watching from basically from TikTok and YouTube. The whole key that I never really understood was that you have to just go in, you go straight in on the bone in the middle, and then you pull it off with your hands.
Oh.
Wait, you split
What
the
about
breast,
like
you
when they
split
do
the
like
whole
the
turkey?
side?
No. You put the knife against the bone and you just start cutting down really slowly and just keep going across until you got it mostly off the bone, and then you just pull it off with your hands. It comes off perfect. I was always doing it the wrong way, cutting it from the bottom and doing all
Yeah.
this stuff, and it comes off absolutely perfect. Then you get this giant breast and you just slice it like this. It's a home run.
Interesting.
Home run.
Okay, well, I start from the outside, move in, but I effectively do the same thing, but I'll watch a video.
TikTok.
I should take a picture. I should have just shown you because it
It
was
was perfection.
perfection. Yeah.
Next
And
time we'll take a video of you making that and a few other things that you've talked about making this weekend.
I don't want to don't talk
We're
about
not going
my
to
other-
ruin it.
Yeah,
Oof.
because I have a
Well, hey, you didn't
It's
comment
a special
actually
surprise.
on the Jimmy Bread chocolate peanut butter pie.
That's right. How was it?
I thought it was very good. In fairness, we forgot to serve it. And so I had it the next day. And I said, "Where was the pie?" I said, "How did I miss the pie?" She's like, "Oh, I forgot to put the pie out."
It
so
happened.
I
Crust was outstanding.
Oh.
agree. But here's
Crust was outstanding.
so I made a
Love a good
mistake.
pie.
I made a mistake.
You don't tell me you heated it up.
No, worse. I left it. I purposely didn't want it to be cold for some reason. And that pie, you have to serve cold.
Yeah, I took it right out of the refrigerator. It's delicious.
Yeah, you have to serve cold. Cold, it was great.
Great.
Warm, it was horrible.
Oh, to bad
So
texture.
you
Bad
did,
texture.
you nuked it?
No, room temperature.
room
I could
temperature.
see that because
Because it's a pie that has to be served cold. He didn't tell me that. When I had the next day, it was perfect.
I only
Did
had
you
it.
have some cream with it?
You could
or
do
ice
whipped cream. Whipped cream. Ice cream.
Whipped cream.
Oh, my brother-in-law power move
Sounds amazing.
brought in custard from oh my God, what's the place in Wisconsin?
Cops.
Custard from Cops. It's great.
Have you ever been to Cops?
Yes, I stopped once.
Yeah. I've stopped every time until Corinne screams at me and says, "We're not stopping one more time at that place."
Yeah, but do you just get custard? Do you get a burger? Do you get everything?
Their burgers are
What do you get?
custard.
Custard. Yeah. the
I've had the burgers there, but they're-
custard. Have you ever had it?
No.
Okay, let's back up. Have you ever had frozen custard?
Yes.
I don't believe you.
Scooters.
Okay,
Love
scooters.
scooters.
Okay,
yeah.
scooters. Okay,
yeah,
that's
yeah,
good.
yeah,
That's
love
good.
it.
Scooters is legit.
Scooters is
Scooters
legit.
is awesome.
Yeah.
Yeah, it's so good. They're
It
about
is.
to close in the next
Scooters
week or so
legit. Culver's is legit.
for the season.
They are, but they're not Cops.
No, but Culver's is legit and Scooters is legit. Shake Shack is fair. Their custard's fair.
I don't.
I
They've
don't
Do
think
they
I've
put
had it.
custard in their milkshakes?
You can buy a
'Cause
cup
they're-
of custard too.
But,
I don't
but
love
they
their
use
milkshakes,
custard
though.
because their milkshakes are good.
Yeah,
I'm not,
they use custard in milkshake.
okay, it's a good milkshake. I'm not a fan of their burgers.
I mean, I like mom.
I like their burgers.
Do you?
Yeah,
I'm not a fan. I'm not a Five Guys either.
I like theirs too.
I like peppers. Remember peppers?
Oh my God.
You're going
Nicole.
back 50 years.
And-
Those were so amazing.
no, there was nothing amazing.
No, they
it
were
was rancid. It was
delicious.
basically dog food.
No, it wasn't. Oh my God, they were so good. With the little peppers in it.
It's
Oh my God.
right. It's right there with Billy Goat.
You are
I
not
get-
fat enough to have your vote count. Okay,
okay.
that's all I can say.
Fine,
Your
but
vote
I
does
know
not
that
count.
I love those.
No, your vote
Peppers
does not
burgers were amazing.
count. I'm sorry, I can't.
Great fries.
Everything.
Great fries. They did have great fries. There's no way that place is still open.
No, there's a new building in there.
Yeah, I was just saying.
But it was a hole in the wall.
Have
to
you
start
been down?
with.
Have you been down to
This
that?
is crazy.
There's nothing there anymore.
No.
It's like a ghost town.
Yeah.
You go down on Van Buren in between the Board of Trade.
Oh,
and
they
the
sold the. They just sold the building.
I understand, but I mean, during the middle of the day, you couldn't even. There's like so many.
What do you
people-
think the
people
SIBO sold for?
Not a lot. How much?
It's amazing how little it sold for.
I would say 50 million.
Are you crazy? I think it was 14.
14 million.
Yeah,
The whole building?
yeah. I think it was 14 or
Wow.
I
something.
think they're turning it into a data center. Aren't there power? Either power or data.
I have no idea, but I mean, I don't know what you do with it, but
But that's the 8th-floor building. They didn't, not the 440 South of Sound, not the whole tower. Just
no,
the
no, no.
building,
Just
the CBU trading floor.
Yeah,
Oh, okay.
That's okay.
Yeah.
Still.
That time was
I
up.
mean-
yeah.
Wow.
Many hours.
Oh, there was a sculpture in the lobby by the woman whose house I live in now.
Oh,
Ruth
really?
Duckworth?
Yeah,
Really?
yeah. And so I
Did you try to
want,
buy it?
yeah,
They said GFY.
GFY.
Right.
Well, they didn't really say GFY as much as they said,
If you want it, we're not selling it.
no, what they said is, what sculpture? Like they didn't even know, okay? Because Fred was the CEO at the time, and I'm like, Fred, I want this sculpture downstairs. He's like, you can have it. I don't even know what are you talking about?
Oh,
Yeah.
that's funny.
Yeah,
So I wonder where it is now.
Fred's apartment.
I'm sure they threw it out.
Fred's apartment somewhere.
No, why would they throw it out?
I don't know. Whoever bought it, I had no idea what it was. It was a weird sculpture on the wall, but I wanted it. But they couldn't
I actually
figure it out.
remember. I don't remember what it looked like, but I remember.
The whole
I
wall.
remember
Yeah.
there being something.
Where
The
would
whole-
you have space big enough to put it?
I don't. I just wanted it because I knew they were going to throw it out. Whoever
He's gonna
bought that
put it in the
building.
basement along with everybody else's furniture.
Yeah, whoever.
that he's
I know they're going
helping
to throw it out
store.
because there's nothing they're ever going to do with it.
Right.
That's funny. All right.
Anyway, welcome to our first live show at 7 p.m. Eastern Time, 6 p.m. Central Time. This is our new time, Monday, Tuesday, Wednesday, and Thursday. So we are excited to, we moved to the nighttime just because more people can watch.
Yeah. And Thursday we do call-in.
Thursday we do call-ins at 3:30 Central Time, 4:30 Eastern Time. But and
That's
then-
Wednesday.
But that's Wednesday.
Wednesday.
I'm sorry, Wednesday we do the
The
call-ins. We play
call-in
it Thursday night.
and we play it Thursday night.
Yeah, Monday, Tuesday, and Wednesday, the show's live at 7 p.m. So it's going to be
It's gonna be
fun. We're going to have a lot more people be able to watch because they can watch at night. There's not that much market talk yet, but the good news is we are building in a lot of really fun portfolio stuff into our new software. So I think you guys are going to love that as well. But
That's right. We have a
And-
good show today.
Yeah,
again,
and
of
the nice
course.
thing is that we will be able to talk about how the market closed. So that's good.
yeah, we'll be able to talk about market close, stuff like that. So, in fact, looking forward to talking about how the market closed today.
Right.
Yeah.
Well, we
Let's
have a
do
good
it.
show.
Let's
Let's
do
do it. We're going to start off as usual with Mailbag and love letters from the Dog Pound. We're going to go into Unleashed, talking about investing in a startup. On Bad Dog, Tom will talk about, is college worth it? He has a bone to pick with some bros. And then on Wow, we're going to talk about raising capital. And Market Talk, of course, as we said, is going to be after the close. So this is perfect. Let's do this. All right, the first mailbag. I want to work on an idea I have for a small business. Although I love my day job, I am considering a $50,000 home equity line of credit for the startup. Any thoughts?
I do have a lot of thoughts on this because over the years, we've had probably, between the years at thinkorswim and the years at Tasty, we've probably had 50 to 100 people write in talking about taking, borrowing against lines of home equity loans to trade with, not necessarily for building a startup, but for trading.
Yeah, but that could be a startup. I mean, that's a business.
Yeah, it is. But we would usually try to discourage people from borrowing against their house or borrowing from a home equity loan for trading, just because I think it puts a lot of unnecessary pressure on you. And a lot of people would do it just to get over the $25,000 pattern day trading limitation, stuff like that. And I just felt it put like all this added pressure on, so I didn't love the idea. With respect for a startup, I mean, I'm much more mixed on this, and I'm much more okay with this. I think when the time is right and you're ready to make this jump into a startup, not when just when you have an idea and you're not ready to fully commit. This person here goes, I love my day job. So I would probably say I'm guessing this is not the right thing for you, just because you love your day job and you're not going to be able to commit 100% or 1,000% or whatever number it is. Like, you basically, if you're going to be successful at a startup, you've got to essentially give your life over to that startup. I don't care what anybody says. There is no part-time startup.
But when you say, in other times you've said you got to start small, how do you start small? Like, if you have a day job too, can you start small in any way?
Well, I think you could start the process.
This is against borrowing.
Yeah, and you
Right.
could, again, it depends on if you are going to leave your job, if you're going to stay in your job. If you could start slowly and say, let me just start laying the groundwork. I agree with Tom. There's no halfway in and halfway out. You're either all in or you're not doing it. That's how we would do it. I have a lot of questions. One would be, you're considering $50,000. How long do you think that runway, what does that give you from a runway standpoint? So if you were to borrow $50,000 and you left your work, your job, how many months does that give you to be successful? Because as a rule of thumb, when people ask me, I say, whatever you think you need, double it, because it's going to be more. I'm not even saying just the money, but the time. So my answer would be, I would have no issues doing it if the timing felt right to you and you thought that $50,000 was enough to really give yourself a chance. Because what you don't want to do is take a $50,000 loan when you think you need $500,000, because that's just going to set yourself up for failure.
Right. Any key do's and don'ts for an upcoming job interview I have? This was difficult interview to get. It was a difficult interview to get, and it's only round one.
Well, nowadays, like, I know when my son was doing an interview for a huge company, that he had 7 rounds.
That's crazy.
Wow.
I mean, 7 rounds with, like, I think
How
5.
Ultimately,
On what a time
level
period?
was the last person making the decision?
Wow.
Like a VP, like a director?
I don't know. But
7 rounds is a lot.
the last person he saw he saw that person twice. The other 5 people were like, were different people at different whatever. And so, and I guess that's not that uncommon. If you make it past like 1, 2, and 3, then but so I understand that job interviews, especially for young kids now, are really hard to get. And like this person wrote, this is only round 1. My dues would be, and we've talked about this before, just differentiate yourself, be yourself and differentiate yourself, and don't be scared to ask tough questions. And my don'ts are, don't ask stupid questions like how many vacation
Like,
days
what's the
I get.
PTO?
Yeah, how much paid time off do I get? How many vacation days? What's your insurance policy? Don't ask any of that stuff, okay? Because nobody who's interviewing probably even knows, nor do they care, and they're not looking for somebody who's going to ask those questions. Just ask, just if you're going to ask questions, just talk about the challenges at work and talk about how you can differentiate yourself and make their lives and that company better.
Yeah, I would say the do for sure, be prepared. And being prepared not only means learning about the business, learning about the role, make sure you look presentable. Make sure that whatever that means for you, make sure that you are dressing in a way that you're making yourself look as, if it's
Maybe don't wear flip-flops.
Yeah, make sure that it's professional. A don't is, I agree with all the comments that Tom just made, and you don't want to make this about you. You want to make this about how you can help the company. And you could say, look, I'm excited to come in and learn. You know, obviously you don't know anything about the role. You could talk about that, but talk about how you can hopefully take this role and really ramp it up.
I have one more thing I want to say, because I really don't care about what you wear, how you look, or any of that stuff. What I do care about, and what drives me crazy sometimes, is when people ask me a question like, what do you guys do? Like, sometimes people don't
But
even
that's
research.
not being prepared.
No, I understand. You have to research the company. What would drive me crazy is not just people going to an interview, but other salespeople who are trying to sell you something. They don't know what your company does, and sometimes they don't even know. They don't even know kind of what font. Like,
Wait a minute. Tell the story. You and Christy for Tasty, that you were in some competition and the judges came over. What was it? You're like, we didn't win because they said something like, well, bakery my wife likes.
no. When we first did Tasty, we won Entrepreneur of the Year from Ernst & Young. This is about 2014. So Christy and I were at the event out wherever they have this giant event with thousands of people. And when they were talking about our firm, the person doing this says, I didn't even know what kind of food service you guys offer. We're like, okay.
That's called not doing your homework.
But I've had situations where, and one of the things that drove me the most nuts ever was when we owned thinkorswim back in the day. We hired some huge advertising firm from New York, and they flew out like 8 people because they charged a crap load of money, and they flew 8 people out to Chicago, and we met in our conference room, and they spelled thinkorswim, and everybody knows that had an account there and stuff. It was one word, all lowercase. Thinkorswim, one word, all lowercase. They spelt it think with a capital T, space, or swim with a capital S.
3 words.
3 words. And this was a huge marketing firm, like one of the big 8 or whatever. I wouldn't see them. I was like, we're done. Before we start, they go, we're sorry. I'm like, it doesn't matter. This is the attention to detail that it matters to me that you get our name right. And I was like, listen, I know you came out here and I appreciate the effort to fly out to Chicago, all 8 of you, but if you can't, this is a lesson. If you can't spell the name of the company right, okay?
Are you going to pitch?
And you're going to pitch me
My
on your,
God.
you didn't spend any
That's
time
really
at all on
embarrassing.
this. You're right. And they left. They were mad.
In tears.
They weren't in tears. They were mad. But anyway, let's move on.
Is there any reason whatsoever not to maximize my 401k matching contribution?
The only reason, the only reason, in my opinion, is if you just need the cash. And when I say need, it's not a desire to go spend the money on something else. There's absolutely no reason to not take advantage of it. It's a great way to start that whole investing process and build up, hopefully a nice equity portfolio over time.
There is zero reason. I mean, it's free money.
Free money.
There's zero reason. And here's the crazy thing. Most companies, the rate of people participating fully in 401k matching is close to 80%. It's not 100%.
It's amazing.
Like 20% of employees at most companies are leaving money, free money.
But again, if somebody needs the cash, they say, I just can't put it away because I need it, that would be.
I guarantee that the number's 20% because people don't understand it.
Or they think that it's not worth it. Right, or it's not worth it, or they just would rather do something else with the money. If you can take advantage of it, do it. It's a great
free.
offering. It's a great offering from a company.
It's 100% return on your money. It's free money.
Yep.
Yep.
Free money. I have a great business idea. That's the good news. The bad news is that I will need more capital sooner than later. Should I, 1, focus on raising the capital, or 2, focus on the build-out task at hand? I feel like raising capital is much more difficult.
I'll jump in on this one. This to me is a chicken and egg, a chicken or the egg, which one comes first? They're both obviously critical. It's hard to try to build a business if you don't have the capital, but you're not going to raise the capital outside of a friends and family round. You're not going to raise any serious capital unless you have a real business. So you have to juggle it and say, look, with what limited amount of capital you have, how far can you go in the process of building the business out? Again, make the comment, whatever you think it is, it's at least double the amount of time and for sure double the amount of money. But trying to go out and just say, I'm going to try to go solicit capital without having an actual product is a massive, massive challenge.
Yeah, I mean, Scott's right. First of all, raising capital is the most difficult thing about building any business, especially if you don't have a track record or experience raising capital, if you're not a good salesperson, if you're uncomfortable asking for things like that. Raising capital is really hard, and you need a network, and people are just, everybody's inclined to just blow you off and that kind of thing. It's really tough. Without a track record or without some history, it's tough. So you have to focus on raising capital at some point because it's so damn hard and it takes so much of your resources. And that's why we always say, if you have a chance to raise capital, do it. Do it. Don't overthink this. Don't worry about your stupid dilution or any of that kind of stuff. Just if you have a chance to raise capital, go raise the capital, because it's so hard to do it. When you need it, it's even harder.
We never touched the capital.
Yeah,
in 2003 we raised.
We've never touched the capital that we raised in any time that we've raised capital. That shows you, like, when we raise capital, we just don't touch it, but we raise it because we can. But like Scott said, you have to have something. Nobody's going to give you on an idea. You're not raising a penny.
Now, I will say a funny story. I don't know if you remember this. We were going back to Detroit, how we started the show. We were just outside of Detroit at an office that we were doing some business with, and we were pitching a tight-knit group of people, friends. They all had a lot of money. And we had this great presentation. We had worked a long time on what the pitch was, the whole concept. These guys came in, they couldn't have cared what we were saying. They just said, you know what, we just wanted to come in and say hello, we're betting on the jockeys, we're in. And we just looked at each other like, wait a minute, what just happened? But that's the track record. And They said that they were giving us the benefit of the doubt because of the track record, because we had proven ourselves. Unusual, but a funny story.
We're going to be talking about this in WOW.
Yep.
In the WOW segment
nope,
too.
we will.
So.
Because it's important.
Yeah. So at what point in the evolution of companies did you go to seek outside capital? Not friends and family, but venture, private equity. How much of a valuation do you need for a fund to consider an investment in you?
That's a tough question, because usually in our world, at some point, the whole universe, especially in finance, is pretty small and incestuous, even though you think it's huge. And in the evolution of companies, a lot of times people find you. They know about you, they find you. But you can go out and seek capital, but you better have some revenue. It is very difficult. Now, there are companies, there are very successful entrepreneurs, that can go out there and basically can say, we're putting together a company, and people throw the money at them. But they've had massive success. For most people, which is 99.9, the friends and family round, most people can get that done. But venture or private equity, these firms are brutal. They will rip you apart. They just literally rip you a new asshole. They are brutal at every level. They ask you, they pry into everything. They think they know everything. You really have to win them over. It's not easy. I think you're going to need a valuation that is relative to the size of the fund that you're talking to. So if it's venture, you can probably raise a couple $100,000 to a couple of million. If it's private equity, it's usually, on the low end, 20 million. On the high end, it could be unlimited. So it really just depends. Private equity is like a couple of notches up size-wise from venture.
And I think something to keep in mind, if you were doing the flip side of this, for them, you go, well, why would they not be interested in putting, $250,000, $100,000, whatever your number is? The amount of due diligence to do a $250,000 deal is probably very close, if not the same as it is to do a $20 million deal. And most of these funds would rather invest in a $100 or $200 million business than in a $5 million business, because to them there's less risk. So they're looking at this as you've proven yourself, you already have a lot of revenue, et cetera, they're happy to take the shot. So not probably the answer that you're looking to hear, but that's been our history.
Venture could be pre-revenue. Private equity usually is there's some revenue. Venture could be a company worth a couple $1 million to to $50 million, something like that. And private equity is usually over 50 or 75 million up to a few billion.
All right, moving on to letters from the dog pound.
One of my favorite things, letters from the dog pound. Love letters.
I really like this visual format the best. This staging makes me feel more like I am there in your room. It also allows us to see everyone's reactions to each other. It's much more interesting to hear Tom talk while watching Sol and Scott's reaction. I love it, thank you.
Well,
I'm glad.
And me too, and we are talking about some ideas down the road to offer up for customers, viewers to come in and witness the show live. So we'll see if we can make it.
Yeah, we got a huge space here, so it's going to be fun.
We'll see if we can make it happen. You grab a nice cup of bad coffee before you come in, you're good to go.
You're good to go. Hey guys, hi guys, I love your content. Please make closed caption available. So I just want to say, this is something that you do on your side, viewers, on the YouTube, on YouTube, on the video, there's a little button that says CC. Click on there, and then the closed caption will appear. So
yeah, I think it's something that's always been available on YouTube.
yes, so it's just a button that says CC on the right bottom of the video. So it is available. Next one says Go Bears.
Go Bears.
And also, where did you get those chairs? I want one.
These chairs out of my basement.
Out of his basement.
But no, I had
Is
them.
a former boyfriend? Not yours, of your daughter.
No. Thank you. No, these are mine. These came from my last house, and
Were these in your living room?
No, they were somewhere else. Oh, they might have been. Yeah.
I think they were.
Yeah. So these chairs, I think they're from Restoration Hardware, I think.
Mm-hmm.
Yeah. I think they still sell them. I don't know.
Probably, if not something similar.
I fired Restoration Hardware, so I don't use
You
it
did?
anymore.
Why?
Oh, don't ask.
I cannot
can't-
stand-
Well, now I need to know because
No.
I love them. I mean, I do. I like the
Okay.
furniture.
This
No.
is a little
No.
bit user
And I
error.
like the cafe.
The cafe is
Have you been
beautiful.
to the cafe?
The cafe is beautiful.
It's beautiful and the food is good.
Yeah.
Okay, it's like he fired Amex. There's some user error involved.
There's no user error.
All right.
They
well,
suck. Furniture-wise, they suck. Everything else is great.
Okay, I'll get the whole story later, I guess. Next, watched the General Magic documentary per your recommendation, Scott. Thanks for sharing that. So many lessons to take away, too.
I can't help you.
I am happy
You don't
to
watch
hear
TV?
that you watched it. I hope others either did watch it or
Yeah.
choose to watch it. Have you watched it?
No, not yet, but I will. General Magic.
It's amazing. I mean, just such a it's a crazy story when you see the people that are in this movie and they failed. They failed. But it's based on a true story. Then you see where these people wound up.
Try not to ruin it for everybody.
Okay. Well, you'll know when it comes out. But anyway, I'm not ruining it. But it's great. Completely worth it.
All right, good. And then, just in time,
Let's do it.
we have our next segment that's Unleashed. Investing in a startup is what we're talking about today, which is very apropos
Well, there was a bunch of emails on
to
that.
all our emails. Yeah.
Yeah, if you want to send us emails, I'm Tom at Lossdog. He's Scott at Lossdog. She's Sol at Lossdog. Then you can send us emails, or you can go to support at Lossdog.
I
But
think
we
it's
like
contact at Lossdog,
oh, contact at Lossdog.
I think.
Should be support.
Okay.
But you can send us emails.
We should know the answer to that. Let's get the answer.
we're
I am pretty
Yes,
sure.
it's oneluckydog at lostdog.com.
Oh, there you go.
There we go. Thank you.
Thank you.
One lucky dog at lostdog.com. So I'm getting a new dog. Can I name it One Lucky Dog?
no, no, we own that name.
Too long.
That's too long.
You can name it Lucky if you want.
Lucky.
There's got to be a
Lucky.
million dogs named Lucky.
It's not bad.
Not
But I
bad.
think
It
we
isn't
need, I
bad.
think we need a B. So there's some names floating around right
Yeah.
now. I think we need a B to stay consistent, but we got to work on that. All right. Do you have names picked out? Not for
For
my,
your dog?
No, not for my dog. I don't care what you think. For your animal, whatever the creature thing you're getting,
Oh yeah, I have a name.
like Bruiser.
I'm not going to tell
Yeah.
you right now, because you know.
Right.
We might be afraid of this animal.
No, not might be.
Anyway, this is a segment that we put together today. Every day, something different on Unleashed. We're trying to focus on business, entrepreneurship, individual value, personalities inside the workplace, just building up confidence and context and engagement with your own value. I think that's really important. And so we have a lot of people that are either building a startup or investing in a startup or investing for the first time, getting used to it. Scott and I recently invested in, I just invested in 3 startups. You just invested in 1 or 2, I think. And so
You keep the good ones away from me.
yes, I'm not sure you want the other ones. But we do this a lot. We would prefer to have, to invest in companies that are a little bit more mature. I think that's how we kind of look at ourselves. We'd prefer a little bit more mature. Somebody's been around for a little while. Maybe they have a little revenue. Companies that somebody else has already vetted are a little easier for us because we're not really strong at vetting something. But sometimes we just get an opportunity to invest in a startup and we go for it because we love the idea, we love the person.
Yeah.
And so that's where we're at. So investing in a startup. Yes, if A, you can afford to lose the money.
That's number one.
Critical.
There is no 1A, 1B, 1C. That's just it.
Yeah.
This is always the most important thing. And human psychology is going to say, well, I want to put in as much as I can, and what if it's a winner and I didn't put enough in? I could have put more in. You hope they're always winners and that you wish you would have put more in, but do not put more money in than you can afford to lose.
Just be realistic. The chances of your startup being successful are pretty slim. I mean, it's in the low single digits.
And so that we're clear here, this is not investing in yourself.
No.
This is,
Right.
the friends and family round, somebody comes to you. So very different, because we're going to talk about the next one but go ahead, about the founder. The team is exceptional.
Yeah, I mean, we're going to be doing a segment later this week or next week talking about investing in yourself. But, if you're investing in a startup, there are a lot of ideas out there. So don't fall in love with the idea. Fall in love with the founder or the team or who's ever leading this, because they need to be exceptional and they need to be willing. I've said this many times. They'd be willing to die in their chair. You want them to work. They need to be able to work so hard that they're willing to go as far as you can go.
And I'm not going to name the business, obviously, but I will say I violated this rule for myself because Tom told me just get over it, just invest. And I wound up doing it. But and they're young, they were out of college maybe a couple years. They could not tell me the story. And I kept trying, and I kept trying to pull information out of them, and they couldn't do it. And I said to Tom, I don't get it. They can't explain what they're doing. How do you think it's going to be successful? And he said, trust me, they're having a hard time communicating it. You want to do this? And it was probably 2 years ago, maybe 3 years ago, and they're on their way. They're doing a great job. So that was one that I would have missed, but Tom's like, just trust me, just do it, and I did it.
Sometimes there are young kids that
need to work on their communication skills.
Incredibly awkward, especially tech geeks. They're just awkward. It's not their skill set to ask for money or to sell themselves.
And
They've never done it
before. It's not an easy skill set to acquire.
No. No. You have to make sure the valuation is reasonable. If you're investing in a startup, you want to make sure the valuation is reasonable. And by that, listen, you don't know what reasonable is. Either do we. I'm not saying nobody knows. But usually what we do is whatever anybody thinks they're worth, we cut it in half. That's a good rule of thumb to start. But at least, because somebody will say they'll say they have an idea and they're raising a little capital. They say, well, we're worth $5 million. Well, how do you come up with that number? Or we're worth $10 million. How do you come up with that number? I was pitched 2 weeks ago on a virtual startup that was raising capital, and they said, we're raising X amount of dollars at $140 million valuation. I go, you're kidding, right? Like, you don't even have a product. Or you have a product, but you don't have a customer, you don't have any revenue. $140 million, you're not going to get there in 5 years. And I was like, you got to be reasonable. I mean, you can't ask for money. It has to be totally reasonable. I mean, I would do that deal on a $10 million valuation. On a $140 million valuation, I'm like,
yeah, that's not a negotiation that's gonna work out.
Yeah.
If you think you're worth 150, you're not talking about 10.
And this gets back to the first one. You can afford to lose the money, so you're diversifying. And this is, the mentality of venture firms, the mentality of private equity firms is, they throw a lot of stuff against the wall, and they hope a couple of them stick.
Yep.
And so, obviously, you're not randomly just picking things blindly. You're doing your whatever work you can do by learning about the founders, by making sure the valuation's right. But you also, want to keep your size relatively small or fair for whatever you have. And then you need to understand the structure and the risks of those structures. And we'll get into a little bit more of this, but there are certain structures that I don't like. Like, I won't lend somebody money. Like, if I'm going to give you money and it's a very high risk investment, it's going to be equity. I'm not interested generally in like safe agreements. I'm not interested in convertible bonds. I'm not interested in loans. I mean, if you're going to get my money, I'm going to get equity in your company.
Makes sense. And then it's a bad idea when, obviously, you're risking too much, as we said.
Yeah.
Yeah.
And that's something that happens over time. And listen, anytime you lose an investment, you're risking too much.
Correct.
Every one that you write down to zero, you're going, damn, why did I do that?
Correct.
You lack information.
And this is a hard one, because if you're investing in a startup, they're not going to have a lot of information to share with you. Obviously, publicly traded companies, you could go out and look at their filings and learn whatever you want to learn. So at this point, it's more of going back to, do I believe in the concept? Do I believe in the founders? Do I believe in some of the intangibles, as opposed to where their source of revenue or what the source of revenue, et cetera?
And a lot of times startups, they pivot. We pivot all the time.
Right.
And you don't know what you think may work. You're going to end up with something. I mean, huge companies like Amazon, they pivoted. Apple, they pivoted. I mean, everybody pivots. It's pretty normal.
Right.
Oh, go back.
Oh.
So the valuation's inflated. We talked about this on the last slide. You could have, you got to be reasonable, and don't, whatever valuation you set up initially, it doesn't mean anything. So just be reasonable. And you have to understand the terms, because a lot of times people don't really understand the different structure of startups and whatever attorney they hire to write things up. And sometimes people get bad information. And then the last thing is, you don't want to be too concentrated in a single area. Like, you don't want to just have AI companies. You don't want to just have, social companies or restaurants, whatever it is. Just spread it around.
Diversify.
Have you ever
diversify.
invested not in your own restaurant? That's simple as I got that. Have you ever invested in a restaurant?
No, not if I didn't own it outright. No.
Yeah, me either, and I've just heard they're not. Yeah.
Yep.
Broadway shows and restaurants.
Even my own didn't work out that well, so it didn't matter. I wish it would have been somebody else's, then I would have had to deal with it.
All right. Assessing your risk.
Yeah.
So number one, team risk. This is questions you should ask yourself, obviously, if you're thinking of investing in a startup. Do founders have proven execution ability? And is the team stable and skilled?
Do the founders that you're about to invest in have proven
Correct.
execution ability?
Correct.
And is the team stable and skilled? Well, you're not really going to know that much about the team. You're going to hope that you're going to hope from what the founders tell you that they're skilled. A lot of times teams are contracted,
Right.
especially dev teams, and a lot of times the people that go, that are all partners on a startup, they're generally pretty stable. But sometimes when some companies will reach a little bit, so you don't really know about stability and skill levels. With respect to founders, they have to have proven something. I mean, something they've done, or something that has to be a reason for you to believe in them.
Right. Number 2, market risk. Is the market big enough to support a venture scale outcome? And is demand real and growing?
Now, I mean, the first one for me would be, clearly, if what you're doing is you're investing in a startup because what you're looking for is some sort of an exit, or you're going to get paid a big multiple on the investment. You could be making an investment in somebody because you're just supporting their idea, and you might say, look, they're doing something on a goodwill basis and you're hoping to get paid back something. But the first one's critical if you're looking for some sort of an exit. And the demand being real and growing is obviously key, because if there's, you could have a great idea, but if there's no demand for the product, then it's not going to go anywhere.
I mean, to be fair about this, I don't even know if anybody, like when we first built thinkorswim, people were like, nobody trades options. There's no market for that. This is a dumb idea, because I mean,
they were right.
I mean, yeah, right.
All you see is the growth thing like this.
Yeah, I mean, we had the right financial product that had this greatest growth over the last 25 years. But at the time, everybody was like, what are you guys, stupid? Nobody cares about this. And then when we built Tasty, people were like, nobody cares about streaming. And literally, nobody cares about streaming. So in both cases, even private equity firms, when we first started Tasty, were like, there's no upside here. Like, what are you guys going to build? So I don't know if the market always, if you really know that, but if you believe that the demand is real and growing, that's enough for me.
Yeah.
You can only do it based off of what you believe
Yeah,
is your
right.
investment.
Right.
Right. Number 3 would be product risk. Is the product viable, defensible, and differentiated?
This is a good one. Really good, because if there's no barrier to entry into whatever the product is, then you just figure somebody along the way, unless you can get out in mass scale, which is very difficult to do, and you're the first to market, so you have brand recognition. A bigger company, if they like your idea and it turns out to be very profitable, a bigger company can just come in and just say, we're going to do it. We're going to do it at scale, faster, bigger, stronger.
We have built things that that I think easily could have been copied, but we differentiate ourselves enough from the rest of the marketplace that they became viable. We have also built other things. The example I give is we built a futures exchange once, where we came up with a product that was that really differentiated itself from the rest of the marketplace, a small micro-sized future, and then the CME just ran us over, because they were 100 times our size. And
that's exactly my point.
yeah, I know. So you do run that risk.
Yeah.
But we've also built, brokerage firms with.
But we have brokerage firms and other people try to come in and do what we did, because they're like, well, if these two guys could do it, we could do it because we're smarter than they are, and they couldn't.
Sure.
So there is, that was defensible, I guess.
Yeah.
Or at least.
I mean, it's a good point.
Right.
Number 4 is financial risk. Is it burn rate sensible? Is valuation rational? Are margins and unit economics potentially sustainable?
I have avoided in making a few investments in the past because I couldn't stand the burn rate, and they were way over hiring and way overspending, and the burn rate to me was not sensible. And that is a reason not to make an investment, because I care about the burn rate. I also want to make sure that the founders / CEO, they're paying themselves either a very small draw.
Modest.
Very modest. The valuation being reasonable is something, like we talked about it earlier. Yeah, you have to, as much as you might love something, if you can't get to a reasonable, what you think is a reasonable valuation for the risk that you're taking, because you have to realize 98, 97, 98, 99% of these aren't going to work. So the valuation, you know, you've got to have a really low valuation because you're the ones, you're taking the first arrow, you know. You're protecting, you know, you're taking the first bullet, let's leave it that way. And are the margins and unit economics potentially sustainable? That one's much more difficult and plays a much smaller role in my decision making. I'm not sure about you.
Well, the burn rate for me is critical, and it's the modest salary for the founders is a must. Yeah, I can say when we started thinkorswim, the mentality for a lot of people, not for us, but the mentality for a lot of people was there was just a faucet out there, you turned it on, you got more cash, it didn't make a difference. And then the dot-com bubble happened and that put an end to all of that. But our feeling was, look, we're gonna take the risk, we're gonna bust our asses to go build this, and if it works, we're gonna have enough equity that we're gonna get paid. So whatever salary we were gonna take, and we didn't take a salary for a while, and then we finally did, it was a very modest salary. But if, as a founder, the founder's mentality should be, I'm gonna get paid if there is an event, if this is super successful, but I'm gonna do everything I can to give it the best opportunity to be successful, which means do not take a big salary. So if you see that,
Yeah.
red flag,
Total
Right.
red flag. All the money we've made in the last 25 years has been on
the equity.
the equity side. We've never taken any salaries that are anything.
Lastly, execution and timing. Is this the right moment in the market cycle?
So I'm laughing as I'm reading this
Yeah, me too. I
Because-
wonder if we're going to say the same thing.
because when we launched thinkorswim, it was right after the dot-com bubble.
It was in the middle of the crash.
It was
It was no, thinkorswim was in no,
07, 08?
No.
We were crashing. The NASDAQ went from 5,000
yes,
to...
yes. It was
to-
the dot-com bubble.
Yeah.
Yes, that one. Yes, it was that crash. We've lived through a couple. So,
Yes.
and people were telling us, oh my God, what a horrible time to start a brokerage firm. Like, it couldn't be a worse time to start a brokerage firm. And we're like, well, these are the cards we're dealt. This is the hand we're going to play. And it actually turned out to be an amazing time to start a brokerage firm because you had a lot of people who were unhappy with their existing firm. And they were like, well, let me give you guys a try because I'm going to look for something else. Whereas if we would have launched into a massive bull market, I think it would have been harder to try to get people, to convince people to
attract,
come over
yeah.
and give it.
Yeah, Thinkorswim was 2000 and 2001, and the market was crashing. We went straight down
Yeah.
80% in the NASDAQ till 2002. And that's when we launched. When we launched Tasty, it was the end of 2010 into 2011, and we were at the fiscal cliff. We just had we were just past the flash crash. We were in this disastrous global meltdown. And yeah, I mean, so the right time for us is always the worst time for everybody else.
I'm not sure what that says about
Yeah.
us, but
But that's the best time in a market cycle is when everybody else is puking.
There you go. Pearls of wisdom. On the poly markets here, or on the...
I love this.
Yeah, these are
We have
just
IPOs before 2027.
Right, so in the next 13 months, literally,
Mm-hmm.
because today's the first, by the way, Rabbit. I don't know if you know Rabbit.
I don't.
We'll explain.
What is it?
It's supposed to be good luck on the first of the month if you say Rabbit to somebody.
Oh, rabbit.
Rabbit. And you say it to Tom, he always forgets, and you have to remind him.
He'll be like, what is
I
that?
don't care about rabbit.
You have to remind him why you're saying Rabbit, so Rabbit. So here, let's bring the slide back up again. This is really interesting to say, again, prediction market. I'm surprised they're this high because the two that I'm looking at would be OpenAI, more SpaceX, that it's 43%. I would have thought these were still a few years out.
Yeah, I mean, it's just fun to look at the prediction markets for upcoming IPOs because these we put up names where you'd recognize them, but because we like to just embed prediction markets into some of the discussions that we're having. Most of these are pretty big companies. These aren't exactly what I would call startups.
Oh, these are not startups.
Yeah,
No, but it's still interesting.
No, but it's still,
yeah,
IPO.
$500 billion, $500 billion, half
Well,
$1 trillion is not exactly a startup.
But
Not a
my
startup.
guess is if you went out to do a market survey for investors, it would be off the charts how many want to invest in OpenAI and SpaceX as soon as they're public. And again,
Yeah, I agree.
regardless of the price.
Yeah.
It's just going to be, I need to get in. I think
Yeah.
they're going to be just crazy oversubscribed, and the market's just, it's going to explode. We'll see if they can hold the valuations.
Okay,
All
well,
right.
we're going to move on to our next segment, which is Bad Dog, Woof Woof.
Ah,
And Scott has a bone to pick
Tom.
with, or I mean Tom.
I can
Sorry.
have a bone to pick, but that's okay.
I need a coffee. A bone to pick with anti-college advice.
yeah, this is a very, it's kind of personal. Not because I just, sometimes certain advice drives me crazy, and this is one thing. So today's rant, we do a little rant every day. Sometimes it's going to piss you off, sometimes it's going to make you happy, but it is what it is. Here's what the anti-college crowd doesn't want you to know about the real value of higher education. Hi, I'm Tom Sosnoff, and I have a bone to pick with the tech bros and self-help gurus telling kids to skip college. Look, I get it. Private school tuition and student debt is obscene. The return on investment math looks brutal. And yes, AI is a real entry-level job threat. But here's what Peter Thiel and the college is a scam brigade conveniently ignore while they hire exclusively from elite universities. College isn't about the lectures. The data is clear. College graduates earn 84% more over their lifetimes than high school grads. That's at least 1.2 million more. But that's not even the point. The real value, you're buying 4 years to figure out who the hell you are before the real world comes for you. You're building a network of people who'll become doctors, lawyers, CTOs, whatever. You're discovering that your roommate from Mumbai sees the world completely different than your high school buddies from Toledo. Sure, you could learn Python and blockchain technology on YouTube, but you know what you can't learn online? How to navigate life, how to read the room, how to collaborate with people you didn't choose and don't particularly like. These are the skills AI can't replicate, the messy human stuff that actually matters. And let's be honest about who's telling you to skip college. Billionaires who went to Stanford, dropouts from Harvard who had safety nets made of family money, and grifters selling $5,000 courses. The critics are right about one thing. College is wildly overpriced. So let's fight to make it affordable again, not burn down the one institution that still offers social mobility to kids whose parents aren't venture capitalists. Let's stop selling fear to kids who need opportunity and never confuse price with value.
Oh, that's right.
A rump.
I mean, it's kind of a topic that drives me crazy. I mean, listen, I know that the Zuckerbergs of the world, dropped out of wherever, Harvard or whatever it is. But don't forget, he's from Scarsdale. It's the what?
Is it?
Yeah, yeah, like the richest suburb in the U.S. I mean, there's Elon Musk talks about he dropped out of Stanford, right? I mean, it just, I get it. These guys, they're very smart, and sometimes it works out, But for the majority of people,
It doesn't.
it doesn't. And when I say majority, I mean like 99.9.
It's got to be a higher number than businesses that fail.
Yes.
Right.
Agree. Yeah.
Yeah.
All right, so we're going to move on to our segment, our WOW segment, Words of Wisdom. And we're going to be talking today about raising capital. So,
Yeah, because this is, we tried to tie everything together today, which I really like. Hope you're enjoying, One Lucky Dog. We're going to, just as a little side note here, we are going to, when we launch our software, introduce our software into the daily show. So you'll be able to see all the stuff we've been working on, which is super cool. But until we launch the software, we're going to just give you a few sneak peeks and cover topics like this. And eventually we'll move the daily show and cover a lot of the different things that we've learned from all the technology that we've built. So raising capital is extremely challenging. It's hard work. It's stressful. It's difficult. It's time consuming. And it's inconclusive. It's an art and not a science.
And you want to be careful. Not all money is the same. And what I mean by that is that when you're going out, if you have the opportunity, if you have more than one potential source of capital, you get to do what they're doing to you, which is to look and say, does this look like, are these the people, the people that I want to invest my money in? You get to flip that around and say, are these the people that I want to be dealing with for the next 5, 10 years? And to say it's an art, not a science, couldn't agree more. In a lot of ways, for those of you who are dating or married, it's similar. It is a marriage once this happens. So don't think that especially if it's a large check, that they're going to write the check and leave you alone. They're going to be all over you if they feel that things aren't going the way that they want them to go. And that doesn't mean it's not the way that you want it to go. You might think that things are super successful. And I can tell you, we had somebody from a private equity firm that was on our board at thinkorswim, and he and Tom would go at it like cats and dogs every single fight. We met or exceeded our numbers every single month, and for some reason it wasn't good enough to this guy. So when you say that it's difficult and stressful, it doesn't end once you get the check or the wire. That's now, you've just locked that in, so be careful. You get to do the assessment. You know, in some ways, as they're doing to you, you can look at them and say, you know what, you're not the right fit for me, or you're a great fit for me, and I'd love to do this.
Right. So some methods of capital raising. I know that your preference is equity financing, either as a founder or investor.
Mm-hmm.
And that's bootstrapping, friends and family, strategic partners, venture or private equity, and alternatives are crowdfunding and public markets.
Yeah, I mean, this is pretty much, this is pretty basic, essentially, right out of the book about raising capital. I think that, I've mentored a bunch of people over the last couple decades that have, started new companies, that have taken over existing companies, that have had to raise capital in the process. And it is the most challenging, because most people that are taking over business or building business, they're really smart. The one thing they've never done is raise capital. Lucky for us, we've been raising capital for 40 years in different businesses, ideas, everything. So we're pretty immune to the pressure of raising capital, or at least we're pretty thick-skinned when it comes to that. We've been told no a million times. We've been told yes a ton of times. So, I mean, we're okay with it. But the bootstrapping is, everybody bootstraps when they first start off. Lossdog's bootstrapped. There's a friends and family round. And after that, you start to look for strategic partners. And what I mean by strategic partners is not necessarily people that are going to really sit there and help you and be there for you or your million questions and stuff like that. What strategic partners are is people that will, A, leave you alone, as Scott just said, because strategic partners tend to understand your business, so they leave you alone. People that bug you all the time don't understand your business, so they're trying to figure it out. But strategic partners, they leave you alone because they kind of know what you're up to. Also, strategic partners could be somebody that you could use later on, have a partnership with, have a business relationship with. Venture and private equity is when you take it and you generally step up a notch, and that's when you're trying to get to like maybe a different level. And alternatives like crowdfunding and public markets, well, public market would be an IPO. That's way further down the line. And crowdfunding is very tough. And I don't know, I actually don't know anybody, I don't know if you do, I don't know anybody that has successfully crowdfunded a startup. So that would be a tough one for me. I know that exists. I just don't know anybody myself that's crowdfunded.
There's others less attractive and more difficult is debt financing.
Yeah.
Loans, private or bank, and lines of credit.
And if you're just starting, the interest rate that they're going to demand is going to be astronomical. So if you're going private or to a bank, and your line of credit, we talked about that when we started, your interest rate should be significantly lower with a line of credit because you're putting up your home, as the asset as collateral. So if given the choice of, between these two, line of credit, I would say definitely supersedes private or bank, because you're going to walk into a bank and they're going to look at you.
Well, they're not even going to give you any money.
Right. They're going to say no, no interest unless you have some revenue, and they're going to charge, again, some exorbitant rate.
I mean, I'll go back for a second. So, first of all, loans when you're raising capital are almost impossible to get. Why anybody would loan you money privately, I don't even know why. And a bank probably won't talk to you unless you have a relationship with that bank that is, meaning you have a lot of money there, or you have some kind of a relationship where it's, you've been doing business with them for a long time and you have a track record or a history of paying everything back. Lines of credit could be against a home, a business, or they might just be somebody willing, you put up X amount of money, they'll give you a line of credit for something. In the trading world, that happened a lot, but in the startup business world, that's a little different because it's hard to collateralize.
Yeah.
More common in today's markets are hybrid options. So like convertible debt and safe note.
Yeah, this is what you'll see in convertible debt. You have to be pretty decent size to get convertible debt, because convertible debt means that they're going to pay you some interest. It's a debt instrument like a bond, but at some point, so you get some interest rate on it, and then at some point you can convert at some price to shares.
Typically a discount. The same with safe note. Safe note is a much smaller scale.
But a safe note, you basically give the money up front.
You do give the money up front, and then you can convert to I forgot the SA, but it's future equity. But you're putting up cash.
You're capped.
Yes, and then you get to, when there is an event, whether a series, B, C, D, whatever, you get to come in at a discount, or an IPO, you get to come in at a discount.
Yeah,
and those would be much smaller events typically than somebody looking at the convertible debt.
A lot of people in today's startup world use safe notes. I personally don't love them. I much prefer equity, straight equity, because I don't really want to give you money and have you go out there and wait as long as you can to get the highest price. Like, if I'm going to invest, I want to get equity at the lowest price possible.
Correct.
And so I personally don't love safe notes, and they turn me off to investing. I much prefer somebody that comes to us and says, hey, we're going to do a straight equity deal. We will walk away from a convertible debt deal and from a safe note deal much quicker than we'll walk away from an equity deal. And just take that for whatever it's worth. Take that into consideration.
Key takeaways are: price yourself fairly.
Yeah, that's a big one. Price yourself fairly. It doesn't matter. Like your first level, like friends and family, or the first time at Series A, it doesn't make any difference. You're not putting some bar out there. It doesn't matter. Price yourself fairly, make everybody happy, and then see what happens.
Right. Identify reasonable needs.
Yeah, you don't need certain things. Like, Scott, you do not need a private jet.
Got
Good,
you don't.
Right.
There's a lot of things that people think they need when they do a startup, and there's a lot of things you can do without.
And this is a big one, for the flip side we were talking about, it making an investment. You got to look to make sure that whatever the founders are taking, that it's modest.
Everything at a startup level, I've seen startups do ridiculous things and they never work out. Everything should be reasonable. Everybody takes out the garbage.
That's right.
That's right. Articulate your motto.
Yeah.
You got to know what it is.
You have to be able to
You got to be able to
articulate.
explain it. That's exactly
You'd be able to explain it and get people excited about it. That's highlight your strengths.
Yep.
And then the growth plan, obviously, I don't think anybody's ever going to present you with an Excel spreadsheet that shows you, the company losing money over the next 5 years. But, as you're going out, you have to be reasonable with the approach, but you got to make sure that whatever you're putting out there, that it's attractive. So you don't want to be so conservative with your estimates that somebody's looking at this going, why would I invest in this? But at the same time, you need to be reasonable.
Yeah, which is a huge challenge as you continue to grow a small business, which is, you're going to put numbers out there that are going to give investors and board members and just anybody that's involved with you certain expectations. So you don't want to undersell yourself. You don't want to lowball anything, and you also don't want to put some ridiculous numbers out there that you can't hit, because then all they know is you didn't hit your numbers. So you want to learn to be, I'm going to be conservative, but I'm still going to show that there's a reason you invested.
Right. And here's our technology. A little snippet of the side of our
Well, these are all
Okay.
the things.
will be.
When we launch the Lossdog software, these are all the things that you're going to be able to see on day one. Obviously, a watch list, which is, we built the first live stream for jobs anywhere in the country. I think it's over 1,000 different job titles and a real-time live stream for jobs, and in different cities, different experience, lots of cool things with that. Then there's an individual profile, which you upload your resume or you fill it in manually and you start to build a profile. And the more information that you put into that profile, the more value we can assess to you. And we can also assess how far you've come with respect to that profile. Then we offer you analytics telling you, hey, this can make you better. This is where you're deficient. This is where you're very proficient. These are things that we see that are kind of glaring at us that are important for you to take away. We built a portfolio section so you can see what Scott and I are investing in, because part of the whole Lossdog kind of ecosystem is that you're going to have an opportunity to create equity in different things over time, and we want you to see kind of what we do to keep equity, to keep our capital working for us. Then we built a wallet, which is a digital wallet. It will hold digital currencies, it'll hold stablecoin, and lots of different things that we're building inside of a digital universe. It also has reward points, which will eventually be digitized. So we're trying to build a digital universe so that every person that uses Lossdog has a reason to come to Lossdog every single day and watch their investments, to earn reward points, to work on their own analytics, their own profile, and also the next one, to watch One Lucky Dog, which
That's
we're doing
right.
here today, which we will expand the show to include a lot more stuff over time. And then lastly, we threw a fun little piece in there to show CEO pay versus everybody else's pay, and versus kind of the median comp at all the S&P 500 companies. And it's a really fascinating study because you got to see how inequitable the current salary system is in America. And you're going to see wealth gap, and it's going to start to explain things to you that are, just, I think, that might turn a few heads.
Yep. So yeah, that was great. We're running out of time, so let's get into the market talk.
All right.
Take it away.
SPU's down 34, NASDAQ down 93, gold up 17, silver up $1.30, Bitcoin down about 5,000, Ethereum down 274, down to 2774, down 274.
Yeah, they whacked. I mean, Bitcoin traded down to almost 88, just under 81 the other day.
Yeah.
I think it was last Thursday or Wednesday.
Yeah.
But this is almost Ethereum getting down to new lows, and this is also. I recently bought some Solana, and Solana's down to like kind of I think it was close. I think around 125-ish, and so there's a bunch of digital assets that have Bitcoin's not on its butt. I mean, it's on the low end, but it's not on its low. But definitely, digital assets have gotten a lot cheaper in the last couple of days, last week.
So bonds, 10 years up a little bit to 4.083, but bonds down 1.1 and a point and 6 ticks.
So I was an aggressive buyer today of bonds. I thought if they got under 117, which I said last week,
They were good buy.
I thought they were an interesting buy under 117. This morning, when I got up, they were 116.25-ish, 116.25. They closed at 116.08. So I was a pretty aggressive seller of Jan puts in there today. I was selling the 114 level. They're actually richer than I thought they would be. What's most interesting about the bond move is that, and we're going to do another rant on this week, but they're talking about, pretty soon announcing a replacement for the Fed and going very dovish, which means aggressively trying to lower rates. But bonds are telling a very different story. And this is a new recent low in the bond market since the last Fed number. So this is really interesting here, suggesting that inflation is not under control. And I think it's kind of, whatever. It's just the bonds being down 107 today, gold being up as much as, but silver being completely out of control. And you and I are both short silver here.
Yep.
It's not
Sure,
working.
A little silver, a little gold, not working. Then some big names. Apple up 4 1/4 to 283. AMD up 223 to 219.76. Amazon up small 66 to 233.88. Google getting hit a little down 529 to just under 315.
I'm not sorry to see that. We're short Google.
Yes. Meta 640, just a little over 640, down $7. Microsoft about 487, down 5. Micron up 398, 240.
It's on my short list to get. I'm a
I'm
little short it right
well,
here.
earnings are the 17th, I think. That's like Micron's got to be one of the last, if not the last. I think Costco is coming up.
Costco's on its butt, but
I think
Micron.
Costco has earnings. I think Costco might have earnings this week.
Oh,
Netflix up $1.55 to 109 and change. Remember that had a big split. Nvidia up 292 to 179.92. VIX is up 89 cents. It was actually up like $1 and change, and then sold way off on the rally at 17. A little over 17. So
well, I think what was interesting today is that last night they were kind of ugly, and the S&Ps at one point, I woke up in the middle of the night, they were down about 50-ish, 51, 52.
was this your Wordle or a different one?
It was Wordle time.
All right.
But whatever, it was 51 or 52, and the NASDAQ was down almost 300. It traded down, it looks like it closed today at around 394, but it was trading down to 202, so 190 points lower. The NASDAQ was last
That's
night.
25,000. He's skipping the big number.
Yeah, I'm skipping the first 2.5.
Yeah, it's 25,000.
2.5202, and now it's 2.5393.
39.
But
But they had both the indices were close to unchanged middle of the day.
the NASDAQ was up.
Oh, it was up.
Yeah.
Okay, SPOOs I think were still down a few dollars.
They were down 7.
Okay.
Yeah, and the NASDAQ actually went up on the day. It got up like 5 or 7 or 8 points. It was small, but it got up on the day. So, and then they sold it off a little bit, towards the close, which doesn't surprise me because it closed with so much premium yesterday that it's just normalizing right now because it was out of whack yesterday. So, I don't know here. It's the beginning of December. This is usually a strong day. It wasn't strong today. But what's your call here?
I mean, the path of least resistance clearly is higher. I think that the market I think it's overcooked. We've had a big move over the last, week and change. So, I think if we saw, 100-point sell-off in the SPOOs, 300, 400, 500-point sell-off in the NASDAQ would not surprise me. VIX is getting bid a little bit, so we'll see. I mean, as long as VIX stays, over 15, we'll see.
I'd like to see a little bit of a sell-off in the NASDAQ for sure. I kind of like bonds here. Maybe I'm a little early, but I think around 116 or the high 115s.
What was the low in this whole move? Did they get in the 114s?
Oh, yeah. I mean, going back a couple months.
Yeah, so
But they got-
114s.
Yeah. I like bonds in the 115 level here. Hate gold and silver up here at this level. Silver way more so than gold.
Way more.
And with respect to stocks, like I said, I think there's a few stocks that got a little pricey today. Reddit got a little pricey. Micron got a little pricey. Even Apple got a little pricey today. But I didn't get short any of them yet. Waiting to see. And we've been a small buyer of some digital assets here. And listen, we'll see what happens. We are still very actively trading and staying in these markets, I guess at a pretty high participatory level.
There you have it. All right. So,
All right.
happy Monday.
Ciao
Happy
for now.
Monday. Rabbit, rabbit.
Rabbit.
All right.
All
We
right,
will see you
everybody.
guys tomorrow.
We will see you tomorrow. Enjoy the rest of your evening.
Bye.